What's happening, everybody? It is Thursday, January the 25th, 2018. Can you dig it? It is another beautiful day in this great city. It's another beautiful day to be alive, man. Another show, another great opportunity to let's get your home loan ready in this January 2018. Can you dig it?
I'm all out.
What's happening? What is going on? I hope everyone has had a great week so far. Every goal, every aspiration, every dream, everything you wanted, I hope it all comes your way. Can you dig it? Thank the multiple amounts of fans that are tuning in and think about the radio, giving comments, giving ideas, just giving your support to the show, man. It's absolutely tremendous, and I can't thank you guys enough, man. I'm humbled by the opportunity, and I'm just very grateful to be alive in this great world that we live in. I know there's some turmoil, I know there's some chaos, but guess what? There's you pushing through it all. It's you making it through it all. It's you non-stop, none-quit. Can you dig it? Because see, oftentimes, man, you'll quit right before the blessing comes, right before the opportunity comes, right before the breakthrough comes. You'll stop and you quit. Never stop and quit. Keep on pushing every day in every way. Can you dig it? Let's get your home loan ready. Man, it is already January the 25th, right? Right? It's moving, man. This time's not waiting on anyone. This time is not waiting on anyone. It's not asking for permission to move and be time. So you continue to do your thing and be the best you can every single day. 7 o'clock, 8 o'clock, 9 o'clock, whatever time it is in your life and in your day. Go get it and go give it the best. Can you dig it? You deserve the best, and everybody around you deserves the best. And everything will improve once you start giving your best. But without further ado, I'm talking pre-approvals, man. I am Shelton Fortenberry, for those that know me on the professional level. AA Mortgage is where I work with as a mortgage broker, and I do home loans for people in reference to getting a home loan, right? And also have a credit repair company for those needing a credit repair. And if you do the home loan through me, I do the credit repair for you at no cost at all. But we'll get into that later. But what I want to talk about is pre-approval letters, right? The importance of pre-approval letters. Okay, they say, what is a pre-approval letter? Well, a pre-approval letter in the industry is that you've looked at a mortgage. You decided one day that, hey, you know what? I want to purchase a home. I want to have a home, okay? So you get with a mortgage broker, or you get with your bank, or you go to your particular bank that you have a relationship with already, right? You go to them and say, hey, I'm interested in a home. So what they're going to look at is your W-2s. They're going to look at for the last 2 years. They're going to look at your 30 days worth of bank statements. They're going to look at your income. What are you bringing in? They're going to look at your bills. Okay, what kind of bills do you have? What kind of revolving debt do you have? Card notes, bills, credit card bills that you have every month, things of that nature, revolving debt. And they're going to take all that debt and then they're going to divide it by your gross income and then see what your debt to income ratio is, right? Go by the 10th on that and see what your debt to income ratio is, right? And then that means that they've looked at your finances. You hadn't walked in there and say, hey, I'm looking for a home loan. Well, hey, go to my realtor and they'll take care of you without anything being looked at, without anything being verified. So in order to proceed and really be taken serious, you really want to get that pre-approval letter, because that shows the realtor and also shows yourself what your buying power is, because you can go out and go look at all these homes and get really excited about these homes. But then once your finances get looked at, you may not be able to qualify for what you think. And then all that emotion kind of goes out of the window. And then you're disappointed about the home loan process. And then when you speak to people, you'll say, well, the home loan process is a grueling process. It's really not. Just have to be prepared and follow the steps. But then that's why I say on some of these shows, put a team around you. Put a team around you, from the seller's agents to the buyer's agents to your lender to your realtor. You want to make sure that you put people around you that's going to be looking out for your best interest, especially if you're a first-time home buyer. I am so happy that one of my first-time home buyers was able to get her keys yesterday in the home. It was a little bit of challenge because there was a lot of things with the seller agent really not being professional as he should have been. But at the end of the day, we got it done. And shout out to AA Mortgage, man, for getting these things done and having the investors available for when people need options other than just what the basic 620 or 640 options are out here. And I'm very grateful for that opportunity to be able to help the first-time home buyer get into a home. And I'm grateful to God for that opportunity. And that's what I got into this business for, to save the world one loan at a time, right? To help people out, but also educate them throughout this home loan process. So it's not just a job to me. It's not just an entrepreneurial venture, but to me, it's just really something I love to do. And I speak about it with excitement because I love when that light bulb goes off in people's head. They're like, oh my gosh, no one really explained it to me in that way to where I can understand it. So I try not to use a lot of technical jargon with you. I try to go over your head and try to use a bunch of big words that you guys don't even understand, because it's a whole different language when you're talking with mortgages. But pre-approvals basically just saying that we've looked at, can you afford a home? Simply put, can you afford what you're looking for? And then if you can't, then we can look and see, maybe you want to look at something a little bit cheaper. Maybe you want to lower that, because you got to think about this. Again, if you guys listen to previous shows, then you'll hear me say this. And if you haven't, then go back and check them out. Their episodes are listed up on Think About It Radio on Spreaker.com, on my fan page at Think About It Radio Show on Facebook. But anyway, if you are in a situation, right, to where say, okay, I want to buy a home, I want to seek a home, okay, you want to gross income, okay? They qualify you. That's what I said. I lost my train of thought. I'm sorry. They qualify you for your gross income, okay, on your home. They qualify you in your gross income. Okay, when you look at your paycheck, just look at your paycheck today. Gross income versus net income, all right? The gross income is pre-tax, before they take taxes out and all those deductions and all those things, right? The average is what? Maybe $250, $300 more than what you will actually bring home, depending on what your tax bracket is and how much they're hitting you upside their head on the taxes, right? But it all depends on how much taxes is coming out of your paycheck, all right? And that's maybe, I say an average, they say, just say $250 a paycheck, right? You get paid bi-weekly. So that's $500 a month that they're saying that you have gross income. But are you actually bringing home that $500 a month? Are you actually bringing home that income per month, that extra $500? No, you're not. No, you're not. So what it is that you don't want to qualify yourself for a home on this false $500 that they saying that they're using to qualify you for, right? You want to make sure that you put yourself in the best financial situation, because one thing about getting a home, it's not just getting into that home. Now everything is on you. You can't call the maintenance man to fix the plumbing. You can't call the maintenance man to do the yard. You can't call the maintenance man to exterminate. All these expenses are on you. So you want to make sure that you put yourself in the best financial situation when you get into this home, because oftentimes a lot of people become house poor to where you can't do anything. Child, I can't go nowhere. I got this house. Oh, man, I can't do it, man. I got this house. I can't do this. No, that house has got you. So because you simply didn't look at or had a conversation with someone that truly was not looking at you as a commission, but saw you as a person, saw you as an individual, right? And then they're able to say, let's get a financial plan together that's going to help you benefit from getting into this home. Because truth be told, the higher price of the home, the bigger the commission, okay? So you want to make sure that you deal with people that's not just trying to tuck you into something that you can't afford and it's going to cost you a problem just for them to get paid, right? So you want to sit down with people. As I said, I say this before and I say this again, build you a team that truly understands this whole process. Understand you as an individual, sits down with you and listen to your needs rather than what they want for you. You deserve it. You deserve the best. You deserve the best options out here that's available to you as a borrower. It may not always be FHA. It may not always be conventional. It may not always be VA or USDA. There's so many options, but there's not a one size fits all. All depends on your credit score. All depends on your income level. All depends on your length of time at your job. All depends on your credit history. Because if you have a recent bad credit history within those 24 months, that's what's going to hurt you. So if you're looking for a home and you say, I'm not looking for a couple of years, okay, so right now start cleaning everything up. Pay your bills on time. Keep your credit card balances zero, low. Just pay them off every month. I mean, just go from there with that. Because if you pay them off every month, guess what? You're not paying interest. I know there's a lot of numbers out here that say 30%, 20% or whatever. But if you paying them off every month, use them like you want to. But if paying them bad boys off every month, you're not paying interest on the balance. So you're giving yourself an opportunity financially to go to even increase there, rather than paying $25 here, $25 there, and that balance is steady increasing. Because the one little funny thing about interest, it accrues daily. So what side of interest do you want to be on? Do you want to be on the side of gaining interest or be on the side of paying interest? But either way, you're going to have to pick a side. So you have to be able to put yourself in the best position before all of this takes place. Strategy. It's all about strategy, right? It's all about putting yourself in a position again and teamwork and aligning yourself with people that know the industry, know your finances. They're looking at, okay, this is what you truly can afford, right? And honestly, my personal opinion, now again, everybody might not agree with me on that, but my personal opinion is I think car notes kill the middle class, right? Because you pay the average car note of $300-400, and then you have insurance and the maintenance on that or whatever. If you can just buy your car cash, man, save you a few $1,000s, right? $2,000-3,000. In Houston, they got them all over the place, right? Put your great mechanic in your back pocket. You're saving on insurance. You're saving on the maintenance on it because now you don't have a bill on it every month because you got a great mechanic, right? I said align yourself team, not just with mortgages, just with everything. So then now you can put your savings toward down payment for a home. And again, the higher the credit score, the less you have to pay down. Funny how this capitalistic society works, right? The better you do, the more you have, the more you can get. You ever seen a celebrity whenever they go somewhere, they never have to pay for anything, right? They got the money. Now, you go there, you got to pay for everything, even the napkins. So you got to pay for it all. So what I'm saying is that put yourself in a position of power. Put yourself in a position of choice. Because, see, they have programs right now where you got a 640 or above credit score, or 680, even 680, man, 3% down, 1% down, right? It's just all about leverage. You leveraging that credit. Now you don't have to put 3.5% down for the FHA. You don't have to have you don't have to put down the 10% down. You don't have to put down, I have an investor again, 10% down if you got a 500 and above credit score. You don't have to do that if your score is higher. So it all depends on your situation and what your needs are at that time. It's all about putting you in the position, the borrower, not the salesman, not anyone else, the borrower. Because again, this is your purchase. This is your opportunity. This is your business. So you want to make sure that you pay maximum attention to it because this is one, again, as I stated, one of the most expensive purchases that you will make in your life, right? So those pre-approval letters, man, also, they don't waste the realtor's time. You don't come in and say, hey, I'm looking for a home, because when you call realtors, they're very excited and they're very happy about showing homes because that's why they got into real estate, right? They wanted to show homes. They like to meet people. And, of course, they like to make money, right? So if you're saying, hey, man, I saw this house on XYZ Avenue and I love it. Okay, well, when I schedule a time to look at it and blah, blah, blah. Okay, now you go schedule a time to look at it and all that. Now, they may or may not ask you, have you received a pre-approval letter? Now, more than ever, though, it's becoming the industry standard. So they're probably going to ask you that. And if the answer is no, then, okay, hey, either I know a lender that I can refer you to, or they'll say, hey, go to your bank or go find you a lender, right? That will give you a pre-approval letter. Then that's when you call me. Not the other lenders. You call me if you're in Texas. Give me a call. Give me a call, right? You give me a call. We look at your financials, as I stated earlier, your W-2s, your bank statements, your income, what's coming in, what's going out. We take a look at that. We ask you a few questions based upon what we see, okay? Then we put some numbers in place, and we see, okay, based upon what you bring in, based upon what's going out, based upon this amount of this house that you're looking for, this is what you can afford comfortably per the numbers. And it's an estimate because we're not talking about insurance yet. Homeowners Association dues, the paid outside of closing expenses like the appraisal, the inspections, and things of that nature. So even when you hear people say no money down, somebody's paying for that inspection. Somebody's paying for that appraisal. So it's truly not no money down. So you still want to have some skin in the game because when you look at this property, you're going to have to put down earnest money, which is typically 1 to 3% of the sales price of the home. So they're looking at that. That's to hold the property, say, okay, I'm interested in this property. But also what that earnest money deposit does, it shows them that you have the access to the funds in order to get this property rather than just kicking the tires and really not serious about it financially because you can't afford it, right? Don't wait to look at your credit. Don't wait to look at your finances. Don't wait until it's too late. Don't wait until the landlord tell you, you know what, you got to go until you decide, you know what, let me look at myself. Let me figure this out. Be proactive in this thing. Be proactive. And I understand. I do get it. I get it. Financial literacy was not taught in school. Not to the degree that it should have been taught. It wasn't really taught. And it wasn't really executed. And a lot of people don't get it until they're adults and already have the bad credit, already behind on stuff, already paying the high interest, but there's still light at the end of the tunnel. No matter what your mistakes have been, one thing about this credit thing is that you can go up, it can go down, it can go up, it can go down. So long as you put yourself in the position again, with the right people, with the right information, with the proper tools and the proper execution, you too can become a homeowner. And not just a homeowner, financially literate. Financially literate, because then you can teach your kids. Because most people that are